Hello, comrades. Imagine taking 365 days off in your life, working on no business, no full time job, nothing. Spending time with your family, going for fun and entertainment activities, and chilling throughout the whole day for one whole year. But at the end of the year, your bank account has been credited with $4 billion. Now, you might think that it could be a dream or ideal life, but it's absolutely not. What if I told you one person have literally achieved it all? He is none other than Warren Buffett, who seems to be a successful investor, successful CEO, successful business owner, and more importantly, the wealthiest individual of all time in 21st century. Now, he is also known to be the Oracle of Omaha, where he literally followed 10 simple habits, which is quite simple, eventually from earlier stages of his life to become a billionaire from being in a middle class situation. Now, he also really suggests the same 10 simple habits to everybody else, to every middle class individual who literally wants to become a millionaire or a billionaire one day in their lives. Now, these 10 habits must be followed in a consistent manner with a structured and disciplined approach. Alright, so let's dive in. First thing is reading continuously. So, Warren Buffett used to read 500 pages daily in his life. Guess what? He used to spend around 80% of his day in reading alone. So, he used to spend time in reading newspapers, business articles, magazines, more importantly, the other financial and analytical reports that really speaks about stocks and the fundamental valuation of these companies. So for him, knowledge compounds just like money upon continuous reading habits. So he still suggests his fellow investors and his retail investors or whomever to start reading at least 10 pages daily. So by reading continuously and taking it to the next level, people could literally become better and have strong analytical mind in taking decisions. He still suggests his own fellow investors to choose a relevant topic or the interesting topic that is being suitable to them so that they could read it for a longer period of time, still come out of the comfort zone and stretch their level of understanding in each and every aspect of the concepts that whatever they do. Alright, so this is so crucial. Reading makes one better, wiser, and even he still says that while other fellow investors struggle a lot, he always stays informed industries and market trends. Also, he suggests to read across various subjects in order to improve the pattern recognition, and he still suggests to take mental notes in order to be prepared for the understanding the market trends and everything else. And finally, he wants everyone to think independently by means of unfollowing the hype around the market. Alright, if this is very clear to you, let's move to number 2. Frugality. Whether we are talking about socks or stocks, I like buying quality merchandise when it is marked down. Now, in spite of even having billions of dollars of money in his bank account and having shares worth millions and millions of dollars, he still lives a simple and normal life. Guess what? He still lives in the home which has been built in the year 1958, and he still drives a normal car, not a fancy and expensive one such as Lamborghini or Bugatti, and that is what he suggests his fellow investors as well. He always follows the habit of living below his means and prioritize value over luxury. And he always used to tell one thing: don't save what is left after spending. Instead, spend what is left after saving. So the frugality is so crucial in building a $1 billion wealth. While instant gratification seems to be hype for every middle class individual, for him, delayed gratification is so crucial. So he literally sacrifices his luxurious life, lavish lifestyle, and more importantly, all those hypes and vibes in order to make a better investment and a better life for tomorrow. So most of his wealth has been built by means of making good financial decisions. And one such decision is living a frugal and simple life. So choose your needs and wants. Needs is so crucial for life, and wants is a choice. You can still ignore it at any cost. And if you always continue to build a luxurious life, please understand, here's where inflation is really good to eat all your money. And this is not my statement, this is what Warren Buffett tells. Alright, so if this is very clear to you, let's move to number 3. It's long-term thinking. Now here's where one of his best quotes comes in. Someone is really sitting in the shade today because they have really planted a tree long-term ago in their life. So he always have a habit of buying stocks, holding them for a longer period of time, for years and years. In fact, he really started holding many number of stocks for decades, and he significantly got valuable returns in terms of capital gains and dividends. So this really requires a lot of patience, at the same time seeing something beyond the short-term fluctuations that really happens in the market. Alright, so most of the people have been victimized by those short-term trends and hypes, while Warren Buffett understands the fundamentals of the stocks pretty well, learns the financial ratios, fundamental concepts of the company, and at the same time understands the true value of whatever he's really going to get after 20 or 30 years of his life, which is what exactly made him more successful investor and a billionaire right now at this point of time. So from this third lesson, he really tells everyone to have a long-term goal instead of a short-term one that gives us the instant gratification. Alright, if this is very clear to you, let's move to number 4. It's value investing. Price is what you pay and value is what you get in terms of stocks or in terms of skill sets or in terms of anything else. Let's say you really invest in entertainment. Tomorrow you might end up with a credit card debt or whatever. Even if it is your money, you will end up having the empty wallet tomorrow. And once again, this is not my statement. That is what Warren Buffett tells to his fellow investors. So it's very important to understand the value before even you pay price for anything else in your life. It could be stocks or bonds or anything else. Rather, he even still suggests his people to buy more books and probably invest in skill sets that could make them better in the industry and that could make them more and more knowledgeable. And he often tells one thing: knowledge compounds just as the money does. So if you don't have money, or if you have a very little amount of money, you could probably use it for investing in yourself rather than investing in stocks. Now coming to his investment strategy, so he always picks up the stock with which he could hold it forever and ever in his life. At the same time, the stock that has a consistent performance, the stocks that has a very good potential for growth, and not just by means of relying on the short-term hypes and happiness, but the ones which has a strong business growth and evergreen future. So avoid short-term speculations and focus on long-term fundamentals. And next is study the business cycles and how does each and every business work on the various trends over a longer period of time. Accordingly, you can pick up the stocks that is better and suitable for giving the long-term returns and investments that you totally deserve. And next is to trust in time-tested strategies than to rely on short-term gains. Alright, if this is very clear to you, let's move to number 5. It's reinvesting profits. So here's where another quote comes in. My wealth has come from the combination of living in America, some lucky genes, and compound interest. Now, as he continued to live a frugal life, he literally reinvested in fact, most of his money into various other stocks. Why? Because reinvesting literally increases the power of compounding to the next level, and that is what exactly made him a billionaire in his mid-50s. Now here's where he prioritized one simple habit in common. He rather prioritized investing rather than saving in his life. So here's where he used something called as DRIP, Dividends Reinvestment Plan, which literally helped him to compound his portfolio and his money over a longer period of time. Next is, he just don't invested money. He also invested his time and skills to learn a lot more about stock market trends, at the same time, the fundamental values of the company that made him to choose the right stock at the right period of time in his life. If this is very clear to you, let's move to number 6. It's to avoid debts. I've seen more people fail because of liquor and leverage being borrowed money. So here's where Warren Buffett highly opposes the debts such as credit card use and loans with high interest rates and so on. So he always suggests each and every individual to not to have any loan at all. And if at all you have, it's better to create a repayment plan and to pay it quickly. And once again, it's not my suggestion, it is his suggestion. Alright? So while owning debt, you always create a liability and not an investment. It seems to be a bigger and bigger burden for you in later stages of your life. And how to do it? For him, the answer is very simple. To live below your means. Focus on your needs and ignore the wants if you don't have money. While most of the people literally swipes credit card to buy iPhones and still spend times on other luxurious activities, here's what Warren Buffett opposes it at this point of time and at every point of time. So another thing is to differentiate good debt and bad debt in your life. If you want to invest into businesses, or if you want to invest it into some sort of infrastructure or rent a villa or anything else, and for that you can still own a good debt by means of mortgage or anything else. So that could still give you a value in later stages of your life. That could still help you to generate cash flow. And coming to bad debt, it's all about credit cards and consumer debts, which is not really good for financial health. And Warren Buffett termed all these as a financial death trap. And he always wants all of us to live in a financial cushion. Financial cushion in the sense, it is a large cash reserve that anybody could own in their own lives. So always have something called as margin of safety. In the sense, always limit yourself to the risk that you have not foreseen in your life. Alright? So if this is very clear to you, let's move to number 7. It's understanding the investments that you make. So he even suggests one thing to all: never ever invest in anything else that you don't understand. So always he suggests to read a lot more books regarding how to analyze the fundamentals of the company, how to read the profit and loss ratio, of the company, how to read the profit and loss statements, the financial ratios, the financial concepts, or whatever. Here's what exactly you need to do to learn a lot more about the company, and you can still come to a conclusion of how the company is very good to perform over the 10 or 20 years of time period, and at the same time you can still decide whether it's really good to give you a valuable returns with a huge cash flow or not. Now once when you start to doing it overall, you will never chase trends, you will never chase hype. You start to understand the market pretty well. You will start to time the market. Time the market in the sense it's very simple. You will be in the market when you don't want money, and you will be out of the market when you want money. And that is what Warren Buffett suggests. Alright, if this is very clear to you, let's move to number 8. It's emotional discipline. Now here's where another beautiful quote comes in. Be greedy when others are fearful, and be fearful when others are greedy. Now what most of the people does is, when the stocks really started to hype very high, at that point of time, most of the people invest, and finally if it reaches the peak point, it started to slump, and here's where most of the people start to lose money. And once when the stock is really at the undervalue, or once when the stock is really at the lower value or the lower margin, and here's where you need to be very greedy, and here's where others are fearful. And when you start to invest at that point of time, at any point of time in your life, you will definitely get the valuable returns that you totally deserve. And that is what Warren Buffett says in this particular habit. And another simple thing, it is better to avoid herd mentality. Always think uncommon whenever and wherever necessary. Alright, if this is very clear to you, let's move to number 9. It's calculated risk taking. So here's where another quote comes in. Risk always comes from not knowing what you're doing. Now here's where Warren Buffett has been seen as a conservative investor. So he always used to take calculated risk by means of deep study of the fundamental values of the company, still having the proper analysis and still understanding the potential outcomes that could probably the company give him in the next 10 or 20 years of his life. And at the same time, it's very important to go against the crowd if the opportunities seems to be very strong. Here's where he suggests everyone to gather as much as information possible. At the same time, learn about the fundamental values in a much better level. Learn to analyze the financial ratios, the market cap, everything in an overall manner, and gather much more information as early as possible, as quick as possible, at the same time, as much as possible, so that you could probably have an immense amount of knowledge and take the decision whether to go for it or not. Alright? If this is very clear to you, let's move to the last one, which is valuing reputation and integrity. Here's where, once again, another beautiful quote comes in. It takes 20 years to build a reputation, and it takes 5 minutes to destroy it overall. And once when you begin to understand it, you will start to do things in a very different manner. Now this particular habit literally speaks or portrays one character. So it's all about building the trust on business partners, on personal relationships, that whatever you have in your life. So in terms of personal relationship and business partnership or whatever, trust is one of the most valuable asset that you need to build upon. And he also used to tell another thing, loyalty is the most expensive and valuable gift. Never ever expect it from cheap people in your life. So that's all for today's video. So these are the 10 habits that has been followed by the greatest billionaire, who's none other than Warren Buffett, and even at his late 90s, he is being so healthy, wealthy and wise, and now in spite of even becoming a billionaire at the later stages of his life, all his hard work in the sense, the discipline and consistency, that is what truly paid him off. While most of the people could literally admire his bank balance and could dream of, few people like him as really being a role model for all of us. So to build something better, discipline and consistency are the key to success, and that is what we have learned from today's episode. Alright, so see you next time. Bye bye.